Time now for the word on Wall Street. Top investors watching your money. Joining me now is Key Advisors Wealth Management CEO Eddie Ghabour. Also with us this morning, Ryan Payne. Eddie, let's start with you. Taking a look at futures this morning, we do have the Dow futures trending higher right now. So we're seeing a little bit of a pushback, a gain, if you will, from what we saw earlier with the Dow lower. S&P is up by 40 points. NASDAQ is up by 300. That's more than 1%. But this is after what we saw Friday. All three major indices did finish lower Friday. The tech-heavy NASDAQ was down more than 4%. That was the biggest decline since April of last year. The S&P 500 also snapping a 9-week winning streak. The Dow facing its steepest loss since the end of March. So semiconductor stocks did face a major sell-off last week following Broadcom's failure to lift its 2027 AI revenue guidance. Semiconductor stocks this morning, however, because let's take a look at those, we've got a reversal of fortune. As you can see, all of them are higher. Now, the declines in AI-linked names also spread to Asian and European markets overnight. And then here's oil. We are above we're not quite at the $100 psychological level, but we are seeing a more than 2% jump in Brent, and we're also seeing a strong jump in WTI. Investors eyeing the fresh strikes between Iran and Israel, which, by the way, President Trump says are jeopardizing the ceasefire, Eddie, and complicating these negotiations. And he posted on Truth Social that both sides are looking for an immediate ceasefire. And he said, look, the shooting needs to stop. We heard that, Eddie, from the president this morning. Your thoughts as we move into a fresh trading week?
So I think Friday should not have been a concern for investors when you look at the semiconductor sell-off. I know that was the headlines, but you've got names up over 200% this year. Some of the ETFs are up 50 to 75%. So although it was a painful one day, when you take a look at perspective, when you have moves like that, you have to expect 20+% corrections along the way. And we think this summer is going to be extremely choppy as we have to have the balancing act of an economy that's going to run hot and possibly make inflation higher. You've got high oil prices, a new Fed coming in, that there's going to be some concerns on a hawkish Fed. So we think this summer we'll see a correction. We told clients 2 weeks ago, I posted it on X, that we started taking a little bit off the table, not because we were bearish, but because we have run too hot too fast. And we think in the summer, we're going to have another amazing buying opportunity to carry us to the end of the year. And in 2027, I think we're going to really take off. So I can't think of a better time to be an investor right now with this AI productivity boom that we're going to see. But this summer, with the dynamics of what's happening overseas, inflation and Fed, you're going to have thick skin and be able to rotate in and out of areas of strength and weakness. But you're going to want to buy the same things during the summer correction. Because, again, I think the setup, when we look 12 months out from earnings to the economy that we're going to see, is extremely bullish.
Well, I think oil prices and gasoline is going to be key here, Eddie, because, Jim Burkhardt, who's over at S&P Global Energy, he goes, look, we have seen a big destruction of not just demand, but a destruction of supply. And the fact that we're getting supplies starting to fall, he's like, look, this cannot go on forever. We may see, pump prices, jet fuel prices, et cetera, start to jump. Ryan, let's talk about the IPO, because the AI sell-off put the SpaceX IPO to the test, and the rocket maker is getting ready for what could be the largest IPO ever. Price of the stock at $135 per share. They're looking to raise $75 billion, a $1.75 trillion valuation. So, Ryan, I want to get your take on all of this as they're set to go public on Friday, because you were on the show with Maria last week, and she was asking you about these blockbuster IPOs. Here's what you told Maria.
We keep talking about this big IPO, these three big IPOs that are going to come out, SpaceX, Anthropic, OpenAI. Collectively last year, they lost $25 billion.
Wow.
Yes. So I think, everyone's talking about, well, the dot-com era, these companies didn't make any money. Well, guess what? The three biggest players right now, arguably in AI, don't make any money. So I do think you have to be cautious here.
Ryan, you said the quiet part out loud, in my opinion. I was sitting right here when you said that to her. Do you still feel that way?
I think there's a lot of excitement around this IPO. Everyone knows about it. Everybody's talking about it. I think, look, at the end of the day, SpaceX is an amazing company. But when you have hype like this, and look, there's a very, very small percentage that's going to float on Friday as well, right? It's only going to be like $75 billion of a $1.2 $7 trillion company. That's not a lot. So demand is going to be strong, and you could get a big pop initially. But, what I always think about is it's not what you own, it's the price that you own it at. And, you have lots of investors that have been in this stock pre-IPO at much lower valuations. And now all of a sudden, they're selling their stocks on the public market. They're getting out. So I always wonder, if I'm getting in on the IPO, why am I so special? Why am I the person that's able to get into this? So I would say buyer beware here. You may get a pop here initially, but at the end of the day, it's a huge valuation for a company that lost $5 billion last year. You've got to keep that in mind. I think there's going to be a better price to buy a lot of these stocks later. Beware of the animal spirits right now.
Well, look, and Eddie, there is a lot of comparisons to the AI bubble that burst, and a lot of us were a part of the market there, or maybe it was just me, but I think you were around too. But let's talk about this.
Was.
Yeah, it was rough. It was rough because you saw kind of the same mania that you're seeing around AI, and I don't. You have to be careful not to compare. I know it's different. These are going to be actual data centers getting built, but again, it's those profits, I think. And I was like, so SpaceX, $1.75 trillion, Eddie. Anthropic valuation, they filed $965 billion. We think we're going to get a filing from OpenAI. That valuation right now is speculated at $852 billion. These are massive valuations for these three companies, and you have to wonder if investors are selling out of all of these other stocks, whether it's the semis, the chip makers, because they're getting ready for these blockbuster IPOs.
I think that's part of it. And I agree with Ryan in the fact that I think you're going to see an initial boom in these names just because of the euphoria going into it. But this really adds to our summer volatility theme and summer correction theme in the sense that this is going to cause more volatility because some of the investors that got in early in the capital raise, when they have the ability to liquidate their shares, I think they're going to because it's prudent. If you triple or quadruple your money, you're going to take some chips off the table. So you'll see that initial boom and euphoria, but once these investors are able to liquidate, I think going to see these names come back in. So I would be very careful on chasing it after the IPO and just be patient and add at lower prices because I think that's essentially what we're going to see this summer.
Yeah, well, it'll be exciting, but as you mentioned in your research, Eddie, it's going to be volatile. Eddie Ghabour, great to have you here. Ryan's going to stay with us all morning long.